Hey guys, welcome to my channel. I'm Greg. I'm going to go over the cryptocurrency market for the time being right now. At the end of this video, people ask a question on the S&P 500, and if they want to know if it's at the end, if it cycles, I'm going to go over that at the end on an Elliott wave perspective. So it's something you want to be very, very careful with the S&P 500. I'll show you. That's all at the end, guys. Primary focus on cryptocurrencies here. Let you guys know what I think is going on. So this has been a little bit of news about the bullwhip effect. Guys coming up with Michael Burry's talking about the bullwhip effect that's going on possibly by the end of the year. My take on it, I want to go in with the bullwhip effect. There's plenty of videos on there that tells you about it. It has to do with the supply chain reaction from one end to the other, especially in the retail space. And there is a possibility that it go on. My point of view right now with everything in the crypto market is when it comes to Bitcoin and Ethereum, I'm going over Ethereum today, is that Ethereum and Bitcoin, in my opinion, are coming up for probably a significant bounce, at least a significant bounce, just based off the data. Here's another information here. I want to go over the 7 major hit recession in the next 12 months. This guy says he's a, what do you want to call this guy? He's like an intellectual type guy. I think he's like 80 years old, but I don't know. I mean, I don't really pay attention much to what people's opinions are. You really have to go off data because people can say whatever they want to say in the media. You have to just be aware of that. So other economies into a recession, and it's looking like we're going to have a second quarter of negative GDP growth. That is true. That is true. And you have to be aware of that. Okay. So if you're a follower of this channel, you shouldn't have anything to be concerned with, because what have I been telling you all along? I said, hey, be in cash or keep your stuff in stables, but it's looking like you can't keep your stuff in stables now. It's looking like we have to exit all the stables because there's an issue with USDT. If you guys haven't heard, there could be an issue with USDC. I don't know about USDC. Personally, I think USDC is probably going to end up becoming the Fed coin for the United States, in my opinion. It seems like it's just being set up to do that, just the people that are behind it. USDC coin by Circle has got deals with US Bank. I've heard BlackRock's behind it, that JP Morgan's involved into it. So, and now I don't know if you guys know, there's Euro coin. It's same by Circle. It's the Euro coin. So there's a Euro version, and now there's the USDC version. So I don't know, guys. So if it was me personally, I do have USDC, and probably I'm going to be thinking, I've been thinking over the last couple days, it's like, this is such an unpredictable market. It sounds like to me that maybe we just need to be in cash until this assesses itself out and just do trades with cash and stuff. So food for thought. You might want to think about that over the next week or so. I have the crypto market, USD coin is still at $1. So is Tether. So I'm not trying to throw any FUD out there, any panic. I don't think you have anything to be concerned with over the next week or two. So you have something to think about. Just think about it. Don't panic and go, hey, should I move some out of USDC coin? That's what I'm doing. Maybe a little bit of a recommendation for others that are following this channel if you have a lot in USDC coin. Now, if it's just a small percentage, hey, not a big deal, not a big deal. Just keep it somewhere in a wallet where you have the keys, either in a hardware wallet or at least a MetaMask wallet where you have the keys, in my opinion, be best. Okay. Or in my opinion, look at the exchanges that are doing well. If you are going to keep anything on the exchanges, my opinion, FTX seems to be doing pretty well. Binance seems to be doing pretty well. I'm not familiar with either one of them, but whichever ones are doing well, probably the ones that are going to survive. And another one is Kraken. So just food for thought. The other ones, I don't know. I'd be a little bit wary of them. So that's just my take on it. Now, I was over here at the Bloomberg. Oh, I'm going over this right here. If you see Federal Reserve Jerome Powell will err on the side of more rate hikes for now, but we'll have to cut rates starting next year, Norma says. Now, I was going through that, and here's the thing. The reason why I'm going over that, I want to go over this right here, federal funds rate with you guys. All right, let's make sense of this chart. And this chart only gives you this line chart, or you got different areas, but this is the line chart on the federal funds rate, okay? As you can see, from 1954 to 1981, there was an obvious trend. Okay, you got a touch there, and a touch there. So there's a trend, and then now the trend got broken in 1981, and then there's a new trend. Okay, contrary to popular belief, trends hold until trends are broken, just like right here. So this trend took 30 years to break. Now, could this trend break next week, or not say next week, say next year, it could. Now, I have a theory that the Fed, when it comes to rate hikes in QT, is going to probably continue to do what it's been doing. And just like this, you see how much more of a whipsaw we're getting like this? This is a theory that I have. So the Fed's going to raise rates. It's at 1.25 right now, more or less, right? So it's going to go 75. So another 2 to 2.5 up here. So the Fed's going to go like this. Boom, 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 till this trend is broken. Boom, boom. And they're going to be, it's just going to be like that. That's just my theory based on this trend, till this trend is broken. Okay. Because look at it. I mean, what do they know right now? What do the world governments know? Look at what they do. All they know is how to inject and keep the economies going. Look at, I think it's California. They're giving people money, $1,000 or something dollars, something like that, to fight inflation. Inflation, here's money for inflation, to make more inflation. You know, these are all the governments know right now, is to do what they're going to keep doing what they're doing until that idea breaks, in my opinion. So the Fed can't really raise, based on all the debt, the Fed can't take rates all the way up to like 15%. So it's going to be a whipsaw effect, kind of like what's going on right here, what he says with this bullwhip effect, kind of like the cracking of the whip. So I just want to let you guys know that, what I thought was going on. And all right, guys, now we're on to Ethereum. And if you look at the overall picture of Ethereum on the, this is the weekly chart. I'm going to go out to the monthly chart, see if we can get any data on that. Looks like we can on a monthly chart. There's not all the RSI data over there, so I'm not going to be too concerned with it on the monthly. It's a overall picture. It's looking, you know, pretty ugly. I would say that would be area for concern. This is going to be the area we're going to talk about right here. You know, people are going to talk about this bearish divergence. Possibly you might hear about that. That is true. You have to be concerned with that all the time. You see bearish divergence. My thing is that this likely is one cycle, and this is a larger cycle of Ethereum. So this was its first big cycle, and this is a different cycle. So you can't say that what I'm saying is you can't say this is 1, 2, 3, 4, because the four can't come in the territory of this wave on Ethereum. All right, guys. So here's the debate. I'm going to go over real quick and try to make it brief. Is this wave right here? Is this 1, 2, 3, 4, 5, or is it 1, 2, 3, 4, 5? Okay. Me personally, right now, I am until proven otherwise. I'm going to go over. This is the of mine. This is a 4, and then a 5, wherever that may end up, like that. That's what I think. If you are a believer of being more bearish, it's corrected a whole 5-wave cycle, and we could have, we don't know. Ethereum is very, very tricky, guys. It's very tricky. So I'm going to present some information to you where this likely may not be a wave 5 right here. It likely may not. Okay. So we're going to go over that real quick. I'll show you that. Let's look at the weekly, see what the weekly looks like on Ethereum. The first thing is the this weekly RSI is down the lowest it's at, pretty much the lowest it's ever been since its infancy. So at the minimum, in my opinion, once Ethereum's done with this its sequence here, there's going to be a bounce. Okay. So if you are bearish, if you're bearish on Ethereum, we have a 3-wave move. We'll have probably a 3-wave move up, and then a 3-wave move back down, just like that. Okay. Something like that if you're bearish. So coming up, traders with any sense will be going bullish, looking at a bullish. Now I have a target box on that where it could go to. So let's say Ethereum lands at 760 more or less. The area right there it could go to is 1559, as high as 1894, 1900, and then up to 2300. The Fibonacci levels on my box. My boxes are usually on bounce. My boxes are always, the bottom is the 0.23 of the last leg. The top is the 0.618, and the middle is 50%. If this is an X-wave bounce, 50% will be the target. If you take a look at this leg, and then this X-wave bounce was 50% of this leg. So now it's going to correct this whole leg. So what Ethereum is likely to do is come down, complete this. It's going to correct this whole leg for a 50% bounce, and then it's going to come down aggressively in another three-wave move to those areas, making this a massive 1-2 to consolidate in this area and possibly go on another wave run, on a third wave run. Okay. Now, my theory is that this is a wave 4. Based off my channeling, it still has areas to go. So this is my, until proven otherwise, down for a 4 and then up for a 5. Maybe this could be a 5th wave failure. Okay, possibly. And the reason I say that is I'm going to take some fib retracements on the whole third wave. How do I know that's a third wave? You just open up your RSI, let you guys know. Here's your third wave peak. On third wave peak, that's the highest point. The most momentum on the RSI will be your third wave going up and down. So up, third wave, and then your 5th wave. So there was your sell signal right here, guys. That was your sell signal on Ethereum to get out. And you know, the volatility, like what's going on with the cryptocurrency market, guys. Look, once you're into these third waves, you're running on third waves. My channel recommends you just exit out of everything. Okay, everything, just so you don't have to deal with this nonsense that's going on in the cryptocurrency. It's just too volatile. It's too volatile. There's too much risk. You know, companies are going to fail, like possibly Celsius. I mean, I hope not. I hope that survives. And yeah, the other ones too, BlockFi, and you had UST and Luna, and there's probably going to be another one because I think Bitcoin's going to do another dump down to 16,800. Okay, so I'm going to take a fib retracement on that and show you guys. Here's a retrace of the third wave, and Ethereum is right in the 4th wave zone at 0.382. Okay, 4th waves can go nearly to 50%. Where would I be concerned with Ethereum? That it is not a 4th wave once it gets near this 50% and is below it. That's usually when it comes to checking retracements on a leg right here, a third wave. Once it gets near 50%, that's where you want to question it. So we're looking at a price target of 641. And even at 50%, Ethereum is still well above that wave 1. Okay. That's something you want to consider. Now, you may see other people take it off log and go like that and come up with a whole different system. You can, that's a different way of doing it. I don't like using that system. So if I take a retrace of this third wave, right, I could take it off log and go, look guys, that's not a wave 4. It's a wave 2. It's corrected 786 to 886. Okay. Down here, 886 would be a wave 2 target of 530, and even farther down into this box of these areas. Those are wave 2 target areas, guys. Down here, literally. So you could do that if that's a wave 2 and this is a wave 5. It completed it. Here's your wave 2. But I see these assets like Ethereum follow more closely to the Fibonacci targets on logarithmic scale than I do off log. Now, like I said before, guys, when you're checking your fibs, you want to check both. So, and even on a smaller scale, if you're on a 2-hour chart or a 45-minute chart, it's not going to make too much of a difference, but you can get an idea. Just check both. All right. So the area, my debate is in here. I'm going to show you guys that this wave right here. Okay. For one, let's pull open the RSI right now. Okay. On the weekly chart, we have a third wave here, as I mentioned, with divergence, your sell signal. You have a first wave over here with divergence. You can see here's a peak and there's a peak, and then it goes up a little bit, but showing you there's a little bit of divergence there. Then you have this 5th wave, a peak and a peak. On this weekly chart, there's no divergence. Okay. That's your first little clue that, hey, maybe something is definitely going on wrong there. I'm going to give you an argument why I don't think that's a 5th wave. Still think it's a 4th wave till proven wrong. That's just my take on it. We'll go out to the 5-day chart. You see this peak to that peak. There's still no divergence on that wave right there, that peak to that peak. Okay. Now, when I go in to the 3-day chart, this is where it becomes an issue. You see, now I have a peak and a peak showing me that I have divergence on Ethereum. So now I have to really investigate that, go, whoa, what's going on here with Ethereum? Okay. You see, this is how these waves can get so technical and tricky. Now, if I go out to the daily chart, I'm getting the same signal from Ethereum. Okay. right here, I have a third wave peak, divergence for a fifth wave, and then I have another peak there in divergence, okay? So, and it doesn't look like there's much divergence there. So this is questionable. This is questionable, and we're not going to know until this is done. So here's the debate. Some people are going to go 1, 2, 3, 4, 5. Okay. There's also 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And this is an ABC. That is the debate right here. This move right here, if it's that, makes a huge difference for Ethereum. If it's an impulse, it makes a huge difference. It changes the path of Ethereum for months, guys, literally months. So I'm going to go over a little bit more data and show you that this has, in my opinion, it's more close to being a corrective move up. One of the reasons why I'm going to say that is this is not typical of Ethereum or any type of crypto to only go about 10%, 12% higher than its third wave peak. Very suspicious, unusual. If this is a fifth wave, this is not good for Ethereum, guys. Those are saying this is a fifth wave. You can more or less say, just like Bitcoin, it's a fifth wave failure, and it's going to come down to here, do a bounce, and it's going down into the box areas. Okay, guys, you want to be aware of that. Now, this is not bad news for those that are hanging out right now, because you can get some here, possibly trade it, flip it, and then ride that back down. Okay, if you're able to use any exchanges in the future to be able to do that, that might be an issue too. So I'm going over this and present information where I don't think that this is an impulse move. It's very suspicious to me. I cannot suss it out, and I cannot, without 100%, go, hey, that's an ABC. I can't do it like I can with Bitcoin. Just can't. Just can't. Now, here's what I'm going to present to show you where I think that possibly it is an ABC move. And there's a couple assets. I know this is not a way you're supposed to do that, but you can get clues from other assets. One is Bitcoin, which I just previously made a video about, where, hey, look at Bitcoin. This is given an ABC. Bitcoin's wave there is more of an ABC, in my opinion. Okay, I could be wrong. I could be wrong. But so if Bitcoin's did an ABC move or a corrective move up, I think the odds are Ethereum could have pulled off a fifth wave. It could. It could. It is an altcoin. I want to go over DOT. DOT is another asset that I like. There is no doubt with DOT that it went all the way up here on a fifth wave to $50, right? All the way up to 50. So it did a moonshot here, and it came down in this move. This is clearly an ABC move. And then it came down aggressively right here on the 19th of July, 2021, and bounced out of there. And there is no doubt right here, guys, that this is an ABC move for DOT. That is clearly an ABC move, not a 5-wave impulse, but a 3-wave move. This was a big suckers rally. Now, don't get me wrong. This is a serious rally. Look at this rally. DOT from $10 all the way up to $55 for a 5X on DOT. Okay, but you see the behavior of this move. Okay, how that's an ABC move, different look than an impulse. You take a look at Ethereum, it's very difficult to suss it out over here. You have this bounce down, and this could be a 1, but it came down aggressively, had that bounce out of there just like that. That's another reason why I'm putting the argument before that there's a possibility that could happen just because of DOT. Another chart I want to go over is the Binance coin chart, the coin that nobody likes. Anytime you talk about Binance, it seems like it's crickets. Binance is a strong coin, guys. In my opinion, Binance is going to be I think there's a chance that Binance is going to be the Google of the cryptocurrency market in years to come. Just by looking at the chart data and the data on Binance. I'm telling you right now, you guys watch 5 years from now or 10 years from now, you guys watch, we'll go back this video, I'll leave it up and we'll see. But I have it, that's just my prediction that Binance is going to become the Google of the cryptocurrency market. There could be changes or anything with Ethereum. We don't know if Ethereum's going to make it, but anyhow, Binance is clearly in a 4th wave move, and Binance had a move there like this in the middle, where there's no possible way that you can say that that was a 5th wave move. There's a minor percentage chance of about 10 or 15% that was a fifth wave move, and Binance is going to a second wave. But as of right now, Binance is a superiorly, and I mean superiorly, bullish coin of doing a fourth wave correction in 0.236 area, which means if it maintains that area through all this bearish cycle, it is a very bullish coin. That's a good sign for that. So that's why I'm using that area to give you guys an example on Ethereum, why there is a probability of, say, 30, 40, maybe even 50% that this was an ABC move. And from here to here is all a fourth wave correction. And let me go back out to the weekly and I'll show you where this is all a fourth wave correction, bringing Ethereum into fourth wave territory, and then be able to do a run up maybe within the next 90 days or end of the year, or whenever this is going to have a change based off other data that I was talking about when it comes to the Fed funds rate, where you can see maybe some whipsaw area in this area and on this chart, and it maintains this trend. And then Ethereum has the ability to, do a push. Now, is there going to be anything magnificent or something like that? I don't think so. I think technically a best case scenario would be in these areas, into this box. Okay, using this channel is a method. This area, but on a channel it could hit the 50% area too, guys. So something like that. Okay, but just to reiterate, I want to go over that a bearish sequence is this. It is that. You have to keep that in the back of your mind. That's vitally important. However, there's going to be a bounce at some point right down here. So if I take my brush, and more than likely you're going to see something like that, maybe not that high because that's very high, and then come back down like that, and you'll have a sequence just like this in the RSI where it's like that. Okay, maybe move over a little bit, kind of like something like that, where that is over there. There's a bounce, just like right here, from here to here, which was where Ethereum went from, basically 2,100 up to 3,900 or more or less in that area. Okay, guys. So that's with Ethereum, and that's what I think that it's going on with it. It's if you look at the media, according to the media, everything is basically, if you listen to the media and not using your common sense logic and using data, everything is going down. Like you can even see it in YouTubers. Like one day, they're sitting here going, oh, well, there's this chance possibly, maybe Ethereum is going to do this bounce. And then the next day you're like, okay, guys, here's the deal. Don't buy any cryptos. We're all going down. Recession's in the works. We are just, don't do anything yet, and it's like, they're so just go off the data. Just go off the data and what the data is telling you. That's what's to keep the emotions out of it. Just use a little bit of common sense and go, hey, boom. Now, here is the deal. Here's the ultimate deal. If you in November, I didn't have the channel out back then in November, December. I wish I did, because I was declaring privately. I said, guys, go to stable coins. Okay. At the end of November, beginning to say, guys, go to stable coins. Not looking good. If you have been in that position, then you're positioned to take advantage of this downturn that's coming up, either the bounce right here. And if it comes down here, you'll be in a position to get right here. So you're doing it well. There's lots of people that this was a suckers rally and they got sucked in right here, just like on Bitcoin. All right, guys, target areas. Let me go. Okay. On the 4-hour chart, I might go down to the 2-hour chart. This is a leg that, in my opinion, here's Ethereum. It did a impulse move here, okay? And then this is the end of it, in my opinion. This is the fifth wave. So if I pull open RSI data, here's the third wave down in the 4-hour. There's the fifth of the third, came back around, and there's your bullish divergence, okay? To pop that up. Now, it didn't go up high on price, but if you can see, it went up real high in the RSI. What that means is that's bearish. That's actually bearish for Ethereum. There's actually something going on with Ethereum. Ethereum is, like, in my opinion, it's not doing so well. It's not doing so well overall. There's a lot of bearish tones behind Ethereum. So there's something going on with Ethereum. I can't really put my finger on, but people are not liking it for some reason. According to my data, there's a lot of money flow out of Ethereum. So we will see. But here's the deal with this move. So this is the 5-wave move. Generally something like this and came down. Here's your third wave, fifth of the third, up for that fourth, and then there's a fifth. Okay, something more or less like that. Here's your A, up for the B, and then now we're in this sequence. Okay, multiple sequences again. Pull open the RSI, take a look. Here it's a 1, 2, and then here is your third wave peak, most momentum, come back up. Here's your fourth, and then a second sequence or a fourth and back down. So there's a multiple sequences in there. So here's the last sequence, 3, 4, and then down for 5. So these are the target areas, 879 and as low as 603 on Ethereum. Okay, just taking some fib levels on that. I'll show you guys on that move, and it's already at a 1-to-1. It's already hit a 1-to-1. So you can expect anywhere from here down to 1.618, which is 649. Okay, it could eventually land right in that area to complete this sequence. Okay, in my opinion. Now, I could be wrong, ABC sequence, just like that. And why I'm saying that's a fourth wave, let me clean this up for you guys, is that the fib levels on that. So this whole wave is the third wave. I'm going to pull a retrace on that wave right here, and you can see right now on log, almost at 50%. It did go kind of high. If I take it off log, you can see, bam, it hit 0.382 right on the nose. So my opinion, it's a fourth wave, and you can see within this leg, this is all going to depend. Now, can it take a move and do here and then come down here and then come back up and then finally come back down? It could. Don't know. Nobody can predict the future. Have like a triangle, a massive triangle. Not going to be too sure what's going on with that, but typically triangles can only be in certain areas of the wave sequence. X waves, B waves, and fourth waves. And my opinion is right here, probably looking at something like 1, 2, 3, 4, 5 for the start of wave 1. And so that whole sequence will be 1 and then up for a 2. 2s can be pretty aggressive, down for a 3, up for a 4 or 5. And it could slow up, guys. It could slow up. So let's say a 2 pops up pretty deep. The third, this will be the wave that dumps. This will be the most aggressive wave with the most momentum down to here maybe. And it could massively pop up on a fourth and do like a diagonal. It could go into that price territory there and do like a diagonal, or it could just dump. It could dump all the way down there. We're just not going to know yet, guys. So there's a couple things. Just because the momentum on the selling on the RSI, you take a look at this RSI down here, is slowing up. Here is the daily, and I'll show you that here's the third wave. This is what you're going to want to look for to see if Ethereum is going to go bullish. On the daily, these are going to be your signals. I'll show you guys right here. There's come down, maybe here's your third wave peak, something like that. And then you're going to want to make sure you see it doesn't break. It maintains bullish divergence. It doesn't take all that out. If it takes that out, it's going to continue to go on. What I mean taking out, erasing divergence. So it can go like this. Stops there, good. There might be a bounce. If it takes it out like that, that means erasing divergence. It means it's going to continue to trend down. Okay. That's your signal on the RSI. RSI using wave patterns, and RSI is very, very helpful on trying to help you predict when there's going to be a reversal in coins like Ethereum. All right, guys, that's the end portion of the Ethereum. I wanted to go briefly. I'm going to spend about 5 minutes on the S&P 500. Somebody wants to know if it's the end of the grand super cycle for the S&P 500. We're going to suss that out real quick. So if you made it all the way to the end of the video, do appreciate you. New subscribers, I do appreciate you too. If you haven't already, drop a like, hit the subscribe button. I'm going to be showing you all for free on Twitter and on YouTube, where you're going to be able to do some pretty cool possible trades coming up in the crypto market, either shorts or longs. Right now, I think we're going to have some longs coming up for the time being. Don't short in these areas. If you are shorting in these areas, be very, very careful. I hope you have experience, keep stop losses tight, etc. Now on to the S&P 500. All right, guys, I'm going to be going over the S&P 500 on its grand super cycle that I have. And on me, I have the quarterly chart or the 3-month chart on the S&P 500. And a follower request, hey, Greg, I want you to do Elliott waves on the S&P 500. And on a long time frame. And I'm going to do that. We're going to suss this out. It's not going to take long. I'm just tell you what I think. The question is that the end of the grand super cycle? Could be. We're just not going to know. It could be right there. This is what you want to look at on the 3-month chart. Okay. Right there and right there, coming up on the end of something. So if it's not done there, it's getting near it. It's getting near it. Okay. Just to let you guys know. And if it's not done here in the upcoming next few years, you're going to want to be careful in the S&P 500. Now, how do I know this is a 1, 2, 3? I'm going to break this down real easy for you guys. Here's the whole S&P 500 starting in 1871. Going to the .com, or not the .com, the 1929 crash, 1930 crash. Look when it hits crash. Yeah, just right at the end, 1930, 29. Here's the .com bust. It made a rally all the way into the 2008 recession, and now it's in a fifth wave. How do we know that? You take a look at the RSI peak for wave 1, came through. Here's the highest peak for your third wave on your RSI to make that the fourth wave. And here it is in a fifth wave. Okay. Now, typically with this third wave extension, I'm going to go over this. This has a third wave extension. I'm going to take this off for the time being and clean up. This has a third wave extension. Now you can see too, this all makes sense. Here's a sharp correction. I'm just going over this sharp correction, and here's a long drawn out correction. That's typically how they work with Elliott waves. The second waves will be sharp. The fourth waves will be long and drawn out in opposite of the second wave. Okay, they take a lot longer. You can see from 9 years. This took 2 or 3 years, but it was much deeper. Okay, so here's the deal. When you have an extended third wave like this, typically the fifth wave will be as long as the first wave. Okay, not long length in time, but the length in magnitude. So what you can do is you can take the bottom of that wave and go to the top of that first wave and go all the way back down to the bottom of that wave. You can take this and move it up there like that. And more than likely, the area this is going to end is at 1 to 1. Could it end right there? It could. These are targets for the S&P 500, the 618, the 786, but more than likely it's going to be a 1 to 1. Okay. Can it go all the way up here? It could, if you can believe it. It could zoom up there, guys. I mean, don't ever think that assets can't keep going up, just like they can't keep going down. It could go whiz up there, but this would be the area. How long is it going to take? That's 8,100. What's the S&P at? 4,800. So you're looking at like massive portion run here of another 59%, 60% or something like that on the whole S&P 500. So to have somebody answer you and tell you that the grand super cycle is finished on the S&P 500 from that wave 1, 2, 3, 4, 5, can't answer it for you. Just don't know. You're gonna have to wait for it to suss itself out. I know that the news and the media and everything that's going on out there in the world, basically you would come to the conclusion that it's done. You're just not going to know. But more than likely, based off probabilities and statistics of Elliott waves, is that this is a fifth wave parabolic move. And in my opinion, there is a likelihood that it will go up more and probably hit that 1 to 1, more than likely, just based off what the governments like to do. They like to inject money into things. And then let me go down and give you that 1 to 1 right here and do something just like that. Make it conservative and drop it down just like that, okay? Into that area. And then you can say, once you see that, then you can say, yeah, S&P 500, more than likely finished. The higher probability finished, okay? In my opinion, it's going to be 1 to 1, just at the magnitude of this wave, okay? And this wave, based off probabilities, is going to be right here, in my opinion. I could be wrong. I could be wrong, guys, but that's the area. So if you're going to be investing into this, you know, or companies that are in this, and by the way, it's like the top 10% of companies in the S&P 500 are the ones that are driving this. The other 90% are just not really doing anything. It's the top 10%. So this is what you're going to want to keep your eye on for sure, and what the correction is doing in there. So the lower sequence picture of it on the weekly is that there was a here's the .com bust right here, and here's the 2008 financial crisis, and then here you have a move on the S&P 500 on the weekly. And here's a third wave peak, and take a look at that. Here's some massive divergence. So it's definitely due for a correction. It's definitely due for a correction, guys. So it's got to correct that. How deep is it? The S&P 500 could come down, do a bounce, and correct that whole cycle. It's down. It's getting down there. So that's actually pretty good. So maybe it's going to bounce up. You got to remember too, during a recession, you can see here's a recession. Here's a fourth wave correction, and it went up like that. So there's a possibility that you could see something like the 1970s as an example, down, and then something like that for a while, and then back down. Okay, I don't think so. Just because of this wave over here. But you can't rule that out. All right, guys. So that's my take on the S&P 500. Nobody's going to be able to answer where that is. It does seem like it's forming some sort of bottom pattern where it's going to have like maybe some sort of bounce coming up in the next couple months, maybe by the end of the year, or maybe starting soon. Don't know. And that could happen. That's my take on the S&P 500. Just saying right now is the time to just be careful. Be careful with it. Look for potential longs for a bounce, in my opinion. Same thing with Bitcoin. And if you don't keep track of the chart data on other information, okay, here's the other chart. I want to show you guys something. It's going to be this chart. It is the oil chart, okay? This is going to be the deal, guys, right here. Let you guys know. The oil chart is going to be the deal. If oil does this, okay, there'll be brighter days coming up. If it does this, there'll be darker days coming up. It's really simple as that, guys. Made all the way to the end of my video on the S&P 500. Thanks a bunch. Drop a like, hit the subscribe. Peace.